This is Alan Bush with ADMIS. In the stock index futures, we are seeing some follow-through gains from yesterday. Also some strength due to the jobless claims report coming in down 7,000 to a number that was better than what analysts had anticipated. Keep in mind that these gains almost entirely due to the Fed's accommodative policies, not to mention that we have a Fed funds target at 0 to 25 basis points, in addition to the $85 billion every month that the Fed is purchasing in treasuries and mortgage-backed securities. It does look like the Fed has used, for the most part, all of their tools in their toolbox to keep this market up. Technically, this market looks very strong. The fundamentals, though, are a little more suspect. We have seen some of the more recent economic data coming in a bit on the weak side. So be very careful with the long side here, since these gains seem to be almost entirely inspired by Fed accommodation. Over in the currency markets, seeing the euro currency sharply higher, this after the European Central Bank maintaining current interest rate policies. They have their base rate at 75 basis points. This is a record low. There was some talk that they could possibly lower that rate by 25 basis points, although that was very much a minority view. Also, we're seeing some gains in the euro currency, even though we did have German factory orders coming in unexpectedly weak. Also, we had French unemployment coming in at a 13-year high. So much of the gains, for the most part, in the euro due to the unchanged ECB policy. Also, we are seeing some strength in the pound. This after the Bank of England maintaining their present interest rate policies as well. Our feeling is, though, that the pound will probably work lower from here today, now that this bullish news is out of the way. And the yen falling to a 34-month low against the US dollar in spite of some bullish news for the Japanese yen. We continue to believe that the main trend is lower for the yen, also lower for the pound. Even though the dollar index is under some pressure today, I think that we will see a recovery later this afternoon, and the main trend is still higher for the US dollar index. Over in the credit markets, seeing some pressure developing, some of this linked to the stronger than expected jobless claims report, in effect with the lower than anticipated number. We also continue to believe that technically this market is likely to continue to work lower, so any rallies in the Treasury futures market should be viewed as selling opportunities. The main trend for this market still appears to be lower. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
It's 415400016. I'm selling one piece of meal like a market. Ticket number is 86666.